right, let's get started. Good to see everyone. You should be able to hear okay and see the screen. We are looking at the dollar Swiss here. So let's get started. We can look at any market you folks want to look at. I certainly have markets that I have a whole list here, but we can look at anything. And what we'll do with whatever we look at, we'll apply the same strategy we have been applying here for years, which is our core supply and demand strategy. For those that are new to this, again, what we're looking for. Well, let me just back up just a minute, just so everybody understands. If you think about it, and feel free to type in the chat if you like. How do you think about how to make money trading? And there's lots of strategies out there. And if you're new to this, you might be thinking of trying all kinds of strategies, and that's okay. But if you take a moment and stop and think, how do you make money trading? Right? At the end of the day, it's buy low, sell high, or sell high, buy low. Right? Do we all agree with that? If we do, then how do you do that? How do you know where prices are going to turn higher, and how do you know where prices are going to turn lower? Again, if we all agree with that, the next step is to understand that what's going to cause prices to turn. It's a supply and demand imbalance. At price levels where demand exceeds supply, prices stop falling and turn higher. At prices where supply exceeds demand, prices stop rallying and turn lower. Do we all agree so far? And if you don't, it's okay. I want you to speak up. But you literally have to keep it that simple. So if we all agree with that, the only question left is, what does that picture look like on a price chart? You follow me? And that's why, when you get to that point, you can throw everything else away. News and economic reports and everything else, those are all influences on price. And those are already, any and all influences on price are already reflected in price, right? If someone hears some kind of a news event or economic report or some kind of number, some data, forms an opinion on anything, right? They're going to have a thought and opinion. That thought or opinion is going to lead to one of two things, a buy or a sell. Okay? And if it's a buy or a sell, we see that on the price charts. Okay? So the key is to really simplify what you're looking at, what you're thinking about, and the strategy you wrap around all that. So let's go ahead and get started here. And I see you guys want to look at the euro first. We can certainly do that. The only market to maybe look at first, though, before we look at any markets, is the dollar. So let's do that. Here's the daily chart of the dollar. Not a whole lot has changed. I've shown you this level for a while. Here it is. That's the 103.40. Again, other levels sitting just above that. So we hit this area. We've fallen quite a bit. Now when we go down to smaller time frames, you will see that above current price, there's not a whole lot to stop the dollar from going up until you get to about 101.10. Okay, the 101.10 area. See that? Yeah, your small time frames, exactly. You're going to find lots of supply and demand levels. But so 101.10 is the next, bigger stopping point for the dollar, where we'd expect it to turn lower, and then we'll have to see where demand is at that point. Below current price, looking at this larger time frame, there's room down to about 99.80 or 75. Okay. When we go down to a little bit smaller time frames, again, nothing changes. Nothing changes. We're we're still at 99.80s when you have to start to get interested. Okay? So the dollar has some, as we're seeing here, the dollar on the 60, the dollar has some room to rally and also has a little room to drop. So should see some nice volatility today. And there you go. So given that, but if the dollar does get up to that 101.10, there is quite a bit of room to drop. So let's go to the euro. With the dollar up, obviously the euro is coming down. Let's find our levels in the euro. Here's, I think, the 5-minute level you were talking about. This one, so I'm just going to combine like literally 3 levels on top of each other here. Anybody take this morning? Either in the dollar or the euro? The dollar would have been the long, the euro the short. Right, not a whole lot to stop this from falling. But let's go. Let's look back here a little bit. I'm sorry, the euro. So yeah, even here, there's really not much demand below. At the same time, there's not a whole lot to stop it from rallying back up. You know, again, with the dollar in between that range that we just saw on the 60-minute chart, the euro is going to be the same thing, just inverse. So yeah, if you're in the euro, I'd probably leave it alone if you didn't, take your profit already. But again, there's not a whole lot to look at down here. We can, I guess I can bring this down to a 2-minute chart. Let's scroll left. Yeah, again, really not a whole lot of demand until you get down to the 106.45, 106.44 actually. Okay. And let's look at the bigger picture euro. Oops, I didn't mean to do that. All right. So bigger picture euro, again, you don't have a lot of levels, close to current price. I'll blow up the 60-minute chart. There's plenty of room for this market to move. Ultimately, the euro looks lower. Reason being that there's room for the euro to rally, but when you get up to this level, which is not fresh, then you've got another level up here and another level above. And below, you don't have any fresh levels. You have plenty of open space. All those pivot lows that you see, sitting just below here, that's the picture of orders being filled. So next time price goes through that area, we expect it to move fairly quickly. Does that make sense? So not a whole lot to, if you're in that trade in the euro, I'd probably just leave it alone. Obviously, if you're in it, you have a plan. Like we said, there's not a whole lot to stop it from rallying all the way back up. There's also not a whole lot to stop it from dropping. Right? You're in that. This is not the area for an entry to enter this market. Okay. What's the next market you want to look at? Again, I've got my list here, but we can happy to take a look wherever. Crude oil, yeah, there are good opportunities in crude. Let's take a look. I want to point your eye to. Here's the weekly chart of crude, and I know we're getting a little bit of a rally here, but the charts are going to show us kind of a bearish scenario. When I bring this down to 60-minute chart, give me just a second here. You'll see we're just starting to get into some areas here, and crude oil is stalling out. See that? At the same time, well, let me just take this down to a 30-minute chart. I think you'll be able to see everything here. As a short-term trader in crude, prices are not likely to go too much higher here. Okay. So we've got this area up here, and here, one more. There you go. So now you can see what we're coming into. You know, if this area here with all those candles stopped price from going up, these smaller areas up here should be stronger, right? Remember, the less trading activity at a level, the more out of balance supply and demand is at the level. Okay? Uh, 53.35. Yeah. Yeah, so this little area right here is fine. You kind of have a couple levels on top of each other. And the nice thing about this level is it's going to take so much demand, so many buy orders to get price up there, you know, that you're not likely to have too many left when you reach that supply zone. So that suggests a big imbalance, at least big enough to turn price lower. The only challenge is you do have some new demand that's come into the market, you know, just a little bit lower. You know, once you start to hit the 52.60, 52.50, and certainly below that 52.45, you kind of have three levels on top of each other. So, but that's nice ranging. Again, if you're just a short-term trader in crude oil, you have some pretty clear turning points today. Yeah, smaller time frame levels are great. Yeah, the less time price spends in an area, the better, as long as you have that pattern that suggests a supply-demand imbalance. Right? Okay. Yeah, so there you go. Let's keep going here. I saw, let's look at the Aussie dollar. And if it's okay, let me start with the futures, then we can go back to the spot, because I'm pretty sure I have some levels. These are, we put this level in well over a year ago in FX Street, and it's been working out great, for the last year and a half. Really just taking trades off this level here. We're back up here again. We're falling from this area. So, but where are prices likely to fall to? How far? Were they likely to turn higher? Let's take a look at all that. Here's the daily chart. I want to, I wanted to, not that level, hang on. There we go. Yeah, I wanted to show you this little level down here. So this comes in at 75.80. See that? There's 75.80 to 75.70. So you're probably looking at a 65 to 80 in here for the area where it's likely to bounce higher. Okay, that's a level you're not going to see on any time frame larger than this. I'm down to a 60-minute already. We're also looking at the futures, so let me go to the spot market, and you'll see the same area. Okay, there it is. So that's a level to watch. Again, it's the origin of this big rally. The other thing is, once the if and when the Aussie dollar breaks this low here, I think typically you'll see people get bearish when the average trader, novice trader gets bearish, and then price shortly after drops right into a demand zone. A lot of people would call that a bear trap. So that's a level. It's a low risk level to watch out for. 15 pips from entry to stop, so not too bad there. Okay, then the next, the more exciting level is right down here, 74.45. Okay, make sure you're aware of that one, 74.45. down to 74.30. Remember, if you're trading the strategy, make sure you're, specifically following the rules. Okay. Entry, stop, target. I'm very big on setting and forgetting your trade. I don't know. I don't know how much you are, but once you're in a trade, just leaving it alone. Okay. Any other markets you want to look at? Otherwise, I can go through my list. These are finally starting to move here. Yesterday was kind of painful. There was no movement. Gold, yep, we could take a look at gold. Let's go look at gold. There it is. So let's blow up this 4-hour chart. So gold is dropping here, but the level I wanted to point out to you, if we looked at gold here, is this one up here. So this is a nice level. So you're not that far away. I don't think it's going to get there today, but that looks like a really a pretty good level. That would meet. Now it is a drop-based drop, so we typically prefer the rally-based drop, as those will have bigger profit zones, a little bit higher odds. But nevertheless, this one would achieve a decent odds enhancer score, good enough to trade. So far, nice big profit zone on this one. Okay. So the level is 1265 to 1272, 7 points. Um, 1285. I see your. So you're looking at this up here. Is that what you're looking at? Yeah. No, that seems fine. We'll go down to a smaller time frame here and take a look. But watch that area I gave you on the 4-hour. Now we're looking at a 60-minute chart, and let's just go back a little bit. Here's the level you're talking about at 80. I thought it was, yeah, there, 85. So nice little rally base drop here at starting at. It really starts at 88. So I'd call it 88 to, I'm sorry, 89. It's 89 to 97. Oh, we're looking at a 60-minute chart. So, yeah, that's a pretty big area. But again, nice profit zone. So there we go. So we're quite a bit lower right now. But if we do get a rally, now where's that rally likely to come from? Okay, so we've been to this area before. Not a big deal. You're probably likely to get a bounce from the 1229 area, so the bottom portion of this, and then watch 1225. But 1229, yeah, I'd say a little bit lower. There we go. Probably about 2850, just a little bit deeper into this area, and then you have another level sitting just below it. Okay. All right. Well, let's keep going here. Again, I can run through my list. I can look at markets you want to look at. Just let me know. Markets are really starting to move now, so we should get some nice opportunity. The DAX, sure. Let me just take a quick peek at the 10-year. Go. Yeah, the DAX, no problem. Let's pull up the DAX. There's some very old lines. I'll get rid of those. Yeah, so the DAX obviously is an equity index market. If we look at the daily chart, let me get some more days here for the 4-hour. We're not getting it. Interesting. Oh, pending more data. There we go. I think we're waiting for a little more data here. Let me just try to get that. Oh no, here, we'll need to... Let's try to get some more data. And then we'll put a horizontal line across the top and we'll scroll back, with the goal being finding some supply. Of course, the data's not coming in. We'll get there. Just a moment. There we go. Okay. So we don't even need a horizontal line. There we go. Yeah, so the DAX is rallying. If you look at the European markets like the DAX, even the Russell yesterday was kind of weak. And we'd be interested in shorting the DAX, but not till quite a bit higher. In fact, I wouldn't, at least for the larger time frames, we need to get quite a bit higher. Also, if you're thinking of shorting the DAX, we do have a little bit of demand that's not too far below. But let's go down a time frame or two and take a look. Yeah, so again, you do have a nice demand zone sitting below current price. Let's put our level in there. This is where prices are likely to turn higher from. Okay. Sitting above current price, we have this rally brace drop here, but it's not fresh. We've got all this activity to the left. It doesn't start to get interesting until you get above this high of 734 right up here. Okay, and up into this stuff. That's why I'd be careful shorting the DAX for any kind of big move at this point. You'd want to let it again get quite a bit higher and up into that supply. Okay. Now, if you're an active trader, now also too, just with the DAX, make sure if you're new to this, you understand the risk reward and everything that comes along with the DAX. This is a big money market that moves very fast. Okay. Yeah, small times I don't see a whole lot. Nothing close to current price anyway. It's just a little 5-minute chart. Okay, so yeah, DAX looks great, but we need to leave it alone and let it move. And if you see the theme that's kind of happening here with a lot of the markets we're looking at, there are great levels above, great levels below, but price just isn't there. You're kind of in the middle of a move, and that's not where you want to enter positions. That's low. That's higher risk, lower reward, and certainly lower probability. All right, let's keep going. If you have a market, otherwise I'll go to some of mine. Let's go to some here. There's natural gas. What do I want to show you? Natural gas. Oh, it's 9:30. So yeah, we want to be looking at oil and natural gas here. Oh, yeah, price. Oh, we just missed that one. Watch the level on the 5-minute chart sitting up here. I don't know if anybody trades natural gas, but I wanted to be looking at crude oil, natural gas around now. You can see price turned higher down here at the demand zone. The next stopping point above is this supply zone up here. So you could have a nice range in the next few minutes in between those two levels. Okay, let's go back to oil. We're not getting any movement there. All right, let's go back to spot FX. Let's look at the yen. And again, as we look at these markets, obviously keep in mind where the dollar's at. Okay. The area I was looking at in the yen that I want to make sure you're aware of, not super close to current price, but we've got a nice nice range set up for us here in the yen over the next, could be day or two. The yen is most likely to stay between this level up here, and I'll give you prices in a second. If you have any questions too, feel free to type them into the chat. We can address them. So that's the 114.45 to 114.90. Now, when I put this chart over here and pull up a 60-minute next to it, these are small levels. We'll get rid of those. I want to also combine a couple levels on the bottom, and you got one level here, and then you got another level sitting on top of it. Okay. So if you stick to these larger time frames, which is a great thing to do in the FX market, you got the 112.35 on the downside and 114, call it 50 on the upside. That's a nice big range, a very big range. And again, if you get into positions in the forex market and hold on to them, you can literally play both of these, right? Right. So yeah, risk on when you're dealing with levels on time frames like this can be a little on the high side, but it all depends on the reward too. So if you're okay with the risk and okay with the reward, you take the trade. If not, you just do the same thing on smaller time frames with smaller levels. But and again, we had to use 2 time frames here because you're not going to see that smaller time frame zone on the 4-hour chart there. Okay, so there's your demand, there's your supply in the yen. We can move on. Any questions about that? Okay, I think we're good to go here. Let's go over to the Canadian dollar. Yeah, that was the one on the right. I see your question there in the chat. Wait, I didn't have anything on the Canadian dollar. Let's keep going. All right, let's take a look at the pound. Not that there's a whole lot to do here, but I believe lower there was a demand zone. Let me make sure. Might have been on this chart. There were a couple small time frame levels, yeah. A couple levels I wanted to point out to you especially this one up here. So prices are going to have to come back up here. You have two levels sitting on top of each other. You have a rally-based drop that turns into a drop-based drop. So if we combine those two, that. Oops, and that. All right. And again, you would, unless the risk is too big, you would combine the two. The lower one should be fine. You can always put your stop in the middle of the upper one if the stop is too, the risk is too much. But we're down to a 5-minute chart, so these are pretty low risk areas. The other one, which makes this profit zone attractive, is that down there. Again, we prefer this drop-based rally at the bottom. The price is going to hit this rally-based rally first, so we can't ignore it. So there's your supply above, and there's your demand below in the pound against the dollar. Now, again, this is on a very small time frame. This is only on your 5-minute charts. Okay. I see your questions here. Where can we find out about those? I'm not sure what you mean by that, though. If you're looking for like more information, there's videos on the Online Trading Academy website, on the FX Street website, and there's plenty of articles. If you're looking for more, if your question is about more information, that would be your next step. All right, let's keep going here. And again, if you have a market you want to look at, type it in. If not, I'll pull up a number of markets here. We've got plenty to look at. Here's one I wanted to look at. We'll let the chart catch up here in a minute. Whoops. Oh, I wanted to look at this one. I just looked at my list. Now here's silver. So obviously this is going to be similar to gold, but I wanted to point your attention to there was a level we were looking at. Where was it? I'm not seeing it here. I wrote down to look at silver. There's a nice level, but I didn't write down where it is. So I'm not sure if it's a small time frame or big time frame. One of the areas that is attractive is this right here. This level sitting right over here, all the way on the right side of the chart. Kind of a little nugget of information that's really important. When you see, for example, a supply zone like this, and I would say the same thing for demand. So when you see a supply zone like this, and to the left you have all these pivot lows, that's usually a really, really good level. For example, down here, you see this demand zone. Well, actually, it's not a great example. But I'll show you a better one later. This demand zone worked fine, but I'll show you a better example later. But anyway, this supply zone that lines up with all these pivot lows here, what that picture represents is the whole, the supply and demand flip, where, what was demand then becomes supply. And that can only happen because of a real flip in the orders in that area. Okay. So keep an eye on that area if you trade silver. Let's go to the other one I had was a yen futures, but that's probably going to be the same level that we looked at in the spot. So we found a nice supply level, nice demand zone. Yeah, I'm not sure why I put this in here. Take a quick peek over here. Yeah, really nothing to do. You know, if prices rally back up to the origin of this drop a couple hours ago, very nice area to sell short at, but not likely to happen anytime soon. With these equity index markets, the equity index futures, if you trade them, you have to be careful shorting them, right? We don't typically call out shorts in the equity index futures unless they're, great levels with really big profit zones on the downside. Remember, the equity index markets are the only markets in the world that are pretty much designed to go up. So be careful with that. I mean, you have to be careful. Just know that. You should always be careful trading. But you're better off buying pullbacks to demand zones in the equity index markets than you are shorting rallies to supply zones. Okay? And again, it's because those markets are designed to go up. Like when when a company doesn't perform well inside the S&P or the Dow, they, like the Dow, they take it out and replace it with a better company. They don't take it out and call it the Dow 29, right? At the same time, you have tons and tons of money going into this market on the 1st and 15th of every month, twice a month. That's the 401k program in the States, right? So I could keep going, but in many ways, this is a market that over time tends to go up and go up a lot. There's a reason for that. So again, my point when you trade this market is try to focus primarily on buying pullbacks to demand. But again, at the same time, when you see a supply zone, it's okay to sell there. When when the level's really strong and when there's a big profit zone on the downside. Okay, does that make sense? All right, S&P. We're looking at. I see your request for the S&P. We're looking at it. So looks like we're past the highs now. So new high here. There's 2,300. You're watching it here. We can see what happens. The Nasdaq's they're all up quite a bit. Yeah, I mean, buy and hold is fine, but the key thing there is where do you get in and how long do you hold? So make sure you have that question answered. People say buy and hold is a terrible strategy. Could be if you don't do it right, but it could also be amazing if you do it right. Just figure out where to get in, use your supply and demand levels, and how long to hold. Okay. Yep, there's the S&P. I know we're almost out of time. If you do have any questions, I see some questions come in from time to time. There's my address, sseiden@tradingacademy.com. And trail stops, I don't use trail stops. I see your question there. They tend to take you out of good positions too quick. But I suppose if your trail stop is behind demand zones when you're long and above supply zones when you're short, that could be one way to do it. Okay. All right. Well, hopefully that was helpful. Again, I know we've got a lot of markets that are in the middle of moves, so there's not a ton of entries today. But some of those markets, if some of the levels we found, if they're in markets that you trade, write those levels down and keep an eye on them. They're very likely to meet entry, later today or tomorrow. Certainly this week, you're going to see a lot of those meet entry. All right. Well, thanks and have a great day, and we'll see you next time.